Welcome to ACF Forces 8, Auditing and Assurance. Today we are looking at audit reports. So we'll learn the applicable standards when it comes to audit reporting. And then we look at the objective of the auditor when it comes to audit reporting. Then we look at types of audit report, the basic elements of an auditor's report. And then we'll look at various opinions that the auditor can give, basis for such opinions, when the auditor modifies his opinion and all that. Then they will look at emphasis of matter and other matter paragraph when the auditor can, give this paragraph in an audit report. And also look at the communication with those charged with governance. So the applicable standards when it comes to audit reporting are ISA 700, that's forming an opinion and reporting on the financial statements. We also have ISA 701, communicating key audit matters in the independent auditor's reports. We have ISA 705, modification of the opinion in the independent auditor's reports. And then ISA 706, that's where the auditor can give emphasis of matter paragraph and other matter paragraph in the independent auditor's report. So these are the applicable standards when it comes to audit reporting. So for the final step in auditing is to issue an audit report. And before you issue this audit report, you have to evaluate your audit evidence that you have obtained so far and consider if there is no misstatement in there. Then if you are convinced that there is no misstatement and all that, then you can now form your audit opinion. And this opinion will have to be prepared. Okay, it has to be given in an appropriately worded audit report. Okay, so the opinion should be inside the audit report. The auditor's report is the means by which the external auditors express their opinion on the truth and fairness of the company's financial statement. Remember, we've said it over and over that the essence of the auditing is to enable the auditor express an opinion on the financial statements, but they can only express this opinion in an auditor's report. So the purpose of this lecture is to learn how to prepare the auditor's report. Many of the contents of the auditor's report are prescribed by statute. And so in this lecture, as we go through the basic elements of the audit report, I'll be taking you through a typical audit report so that you appreciate this point. They are also subject to professional requirements in the form of ISA 700 forming an opinion. So we have two types of auditor's reports. We have the modified auditor's report and then the unmodified auditor's report. So you can write this somewhere. Two types of audit reports, modified and then unmodified audit report. So for audits conducted in accordance with ISAs, the wording of the unmodified auditor's report will contain a minimum number of consistent elements so that users know the audit has been conducted according to recognized standards. So at the end of the day, I'll take you through the elements of a typical unmodified audit report very soon. And the wording will be standard except where additional paragraphs are added for emphasis of matter and other matter paragraphs. So let me take you, I've already told you that the auditor will have to determine if there is sufficient and appropriate audit evidence before he can express his opinion to be sure of the evidence that he has gathered. So let me take you to these things. You already know them, that's why I'm skipping. What's the objective of the auditor when it comes to audit reporting? The objective of the auditor is to form an opinion on the financial statement based on an evaluation of the conclusions drawn from the audit evidence obtained, and to express clearly that opinion through a written report that also describes what the basis for that opinion. So as I've already indicated that there are two main types of audit reports, modified reports and then the unmodified audit reports. Whenever you hear modified audit reports, we mean a clean report. Clean reports. Clean reports. In the unmodified audit reports, the auditor will express an unmodified audit opinion. You also have types of opinion. We have modified opinion and then the unmodified opinion. So in an unmodified audit report, the auditor will definitely express an unmodified opinion. Unmodified opinion simply means that the auditor thinks the financial statement is giving a true and fair view. That's the clean report. That's the unmodified opinion. In that report, the auditor is saying that the financial statement gives a true and fair view. And that means it's what an unmodified opinion. So take note of that. When it comes to a modified report, the auditor can either give an unmodified opinion or a modified one. Or a modified opinion. But when it comes to unmodified report, you can only give what the unmodified opinion. Please don't get confused. So an unmodified report simply means the auditor is expressing an opinion without reservation that the financial statement shows a true and fair view and have been prepared properly in accordance with relevant reporting framework. So that's the implication of an unmodified report. The auditor therefore expresses an unmodified opinion. But in the case of a modified auditor's report, an audit report is said to be modified when a matter arises which does not affect the opinion given by the auditor, but will give rise to an emphasis of matter paragraph or other matter paragraph. Kindly note these things too. I will come back to them. So in a modified report, it could be that the auditor is giving an unmodified opinion. That's why we said that a matter arises which does not affect the opinion. So it simply means that the auditor will give an unmodified opinion. The opinion will be unmodified. So unmodified. However, the auditor will give additional paragraph called the emphasis of matter paragraph or the other matter paragraph. So the fact that the auditor is bringing in additional paragraph in accordance with ISA 706, it makes the audit report a modified one. It makes it a modified audit report. A modified audit report simply means that it doesn't follow the form or then the format for an unmodified audit report. Anything which doesn't follow the format for an unmodified audit report is a modified audit report. So a matter may also arise which does affect the opinion issued. So it is trying to tell you that in a modified report, the auditor can give a modified opinion. The auditor can either give a modified opinion or an unmodified opinion. If he's giving an unmodified opinion, then it means he's introducing other, paragraphs such as the emphasis of matter paragraph or the other matter paragraph. So this is a modified audit report. So in an unmodified audit report, we are saying that he gives an unmodified opinion. And that means that financial statements is prepared in all material respects in accordance with applicable reporting framework, and an unmodified opinion will be what's appropriate. So the auditor doesn't have any reservation whatsoever. But when there is a modified report, which usually come with modified opinion, then you're saying that based on the evidence he has gathered, probably there is an issue. Now let's look at the unmodified audit report and then the formats. Until 2017, this used to be the format of an unmodified audit report. It used to be title, address, C, introductory paragraph, management or director responsibility, auditor's responsibility, basis of opinion, auditor's opinion, other reporting responsibilities, auditor's signature, dates of what reports, and then auditor's address. So until 2017 audit reports, this used to be the format. So your assignment is to get yourself an audit report that was prepared before 2017 and just go through to see if it follows this format. But from 2017 onwards, the basic element in an unmodified audit report changed to this. So this is now the format for an unmodified audit report. Kindly take note of it. It has the title. It has the title, the addressee, the opinion paragraph, the basis of the opinion paragraph, key audit matters, other information included in the annual reports, management or director responsibility, auditor responsibility, report on other legal regulatory requirements, auditor's signature, date of the report, and then the auditor's address. The basic elements of an unmodified audit report. So any report without a basis of modified opinion paragraph, without emphasis of matter paragraph, or without other matter paragraph indicates that that report is an unmodified audit report. You realize that in this format, we don't have anything like basis of modified opinion. We rather have basis of opinion, which is telling you that in a modified audit report, it wouldn't be basis of opinion. It's likely to be basis of what? Modified opinion. And in a modified audit report, you are likely to see other matter paragraph or emphasis of matter paragraph. You realize that those things are not here. They are not here. So what you see here is the basic element of an unmodified audit report. So then that means that this is how a modified audit report will look like. It is likely to have what? The modified opinion paragraph and then basis of modified opinion paragraph. And then it's likely to have emphasis of matter or other matter paragraph. But you realize that in the modified, in the unmodified report, it's just the opinion. When you come here, it is basis of what? Modified opinion. It is basis of modified opinion. But when you come here, it is basis of what? Opinion. Let me highlight it for you. Basis of opinion. And then here too, you see what? Emphasis of matter or other matter paragraph. These things, you won't see them in what? The unmodified audit report. Apart from these three things, the others are virtually the same. Now I want us to take the various elements of an unmodified audit report and go through, and I have a typical example for you, I have the financial audit report of GCB Bank for 2019. I'll take you through that one alongside. But I'll employ you to also get the audit report of other entities and just go through, compare it to the format I've given you. And then in exams, you may be tasked to write an audit report. So the title of an audit report is always what? Independent auditor's report. So as I've told you, I have this guy. I have an audit report here, so I want to project it to you as well. Hold on, I'm trying to get you. Okay, so I believe you can now see my entire screen. So this is the annual report of GCB Bank. And inside the annual report, it has the audit report. So the title is Independent Auditor's Report, just as I've said in the slide. So the title is what? Independent Auditor's Report. So the word independence here is very, very important. It signifies that the auditor has met all the ethical requirements concerning independence and therefore distinguishes the auditor's report from other reports. It also clearly indicates that the auditor was indeed independent throughout the audit. He was independent in mind and in appearance. That's why he's stating that this is an independent auditor's report. Now let us look at the next one. The next element is the addressee. The addressee are those for whom the report is prepared. And you know that it is members or owners of the organization who appointed the auditor at the annual general meeting. So if that is the case, then the addressee is usually the owners or shareholders of the organization. But sometimes the audit report is addressed to those charged with governance. So let us come to GCB's audit report. You see to the shareholders of GCB Bank Limited. So that's the addressee. It is always written clearly. The next step is what? The opinion. The next element is the opinion paragraph. And the opinion paragraph, in the opinion paragraph, it's it identifies the entity whose financial statements have been audited. It also states the financial statements that have been audited, and it identifies the title of each statement comprising the financial statement. It also refers to the notes, including the summary of significant accounting policies. It also specifies the dates of the period covered by each financial statement. And the auditor now expresses the unmodified opinion. Remember, I told you that in an unmodified audit report, the auditor expresses an unmodified opinion. So he expresses the unmodified opinion. And he also states whether the financial statements present fairly in all material respects, or it gives what? A true and fair view. So that is the opinion paragraph. And it also indicates whether the financial statements are prepared in accordance with applicable financial reporting framework. So it will indicate all of this information in the opinion paragraph. Let's find out from GCB Bank to see if they have all this information. So we said it will identify the entity. So what do they have here for us? We have audited the consolidated and separate financial statements of what? GCB Bank Limited. So let me erase this. I couldn't write it well. you realize that of GCB Bank Limited, the name of the organization has been clearly stated. So the name of the entity which have been audited will be stated. And then they also see the financial statement that have been audited. So we'll come here. So we have audited the consolidated and separate financial statements of GCB Bank Limited set out on pages 46 to 134, which comprises the statements of financial position. The statement of financial position, the statements of profit and loss and other comprehensive income, the statement of changes in equity, statement of changes in equity, statement of cash flows, and the notes to the consolidated and separate financial statements. So you see, it will identify all the financial statements that have been audited. It will also give the title as they've presented over there. And it will refer to notes. I've made mention of that. It will specify the period. So you realize that here, as at what, 31st December 2019. So the period has also been what? Okay, so as I was saying, it will also indicate what the period. So that's the period here. It will indicate the period. So with the period here is what, 31st December 2019, to indicate the period for you. And then the opinion will be stated clearly. In our opinion, the consolidated and separate financial statement present fairly in all material respect the financial position of GCB Bank Limited as at 31st December and of its financial performance and cash flow for the year ended in accordance with the International Financial Reporting Standards and the requirements of Companies Act 2019 at 992 and banks and specialized deposit-taking institutions. So it has stated the opinion in line with what fair presentation framework and then compliance framework. The fair presentation framework is where they say that in our opinion, the financial statement presents fairly in all material respects the financial position of the organization. So that's the fair presentation framework. It will state whether the financial statement, let me share that one also with you. So in the slides, I've indicated that with the fair presentation framework, the opinion will state whether the financial statement presents fairly in all material respects or give a true and fair view. So it's here, it's stated that the financial statement presents fairly in all material respects. And at the end of the day, you also say that in compliance, in accordance with international financial reporting standards and the requirements of the Companies Act and all that. That's also the compliance framework. Look at the compliance framework. It states whether the financial statements are prepared in all material respects in accordance with applicable reporting framework. So here, the financial statement of GCB Bank was prepared in accordance with what? international financial reporting standards, and then the requirements of the Companies Act 992 2019, then Bank and Specialized Deposit Taking Act. So these are the compliance framework requirements. So you realize that UCB Bank Limited, the opinion paragraph has done justice to what the statute states. Now, the basis of opinion. The auditor's report shall include a section directly following the opinion section called what? The basis of opinion. So you realize from the UCB Bank's report that right after the opinion, you see basis of opinion. You see basis of opinion. Then you come here. This basis of opinion will state that the audit was conducted in accordance with international auditing standards. So let's come here and check. We conducted our audit in accordance with international auditing standards. It will continue to refer to the section of the auditor's report that describes the auditor's responsibility under the standards. Our responsibility under those standards are further described in the auditor's responsibility for the audit of the financial statement. So here it is referring you to the auditor's responsibility paragraph. And this session will also talk about the fact that the auditor believes that the audit evidence obtained is sufficient and appropriate to provide the basis of the auditor's opinion. So this is very crucial to the basis of opinion. What is the basis of your opinion? The basis of your opinion is the fact that you have gathered sufficient and appropriate audit evidence to provide a basis for your opinion. So the auditor will state clearly this information. So I'm looking for that one. So you see, we believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. So that statement is crucial. It has to be stated by the auditor. They will have to reaffirm in this paragraph, the auditor reaffirms the auditor's independence of the entity in accordance with the relevant ethical requirements. So they will reaffirm their independence. So let's look for that statement here. We are independent of the group in accordance with the requirements of International Federation of Accountants Code of Ethics for Professional Accountants, including international independent standards. The code is issued by International Ethics Board of Accountants, IESB, and we have fulfilled our other ethical responsibilities in accordance with this code. So they've emphasized the fact that they were independent and that they prepared, their independence was in accordance with the various requirements. So reaffirming their independence has already also been captured by this example of ours. Now let us move on to the next one. Key audit matters. You realize that that is what is following the basis of opinion in our example, the UCB Bank's audit report. So key audit matters are those matters that in the auditor's professional judgment were most significant in their audits. Remember, before the 2017 amendment of the basic elements or the format of the modified audit report, there was no key audit matters. There was nothing like that. Key audit matters is coming from ISA 701. So the birthing of ISA 701, that comes with the key audit matters. Before, there wasn't anything like that. Remember, I told you that whenever the auditors are auditing, that they come across anything of worry to them, they include it in what the management letter that they send to those charged with governance. So all issues that they come across, weaknesses in internal control and all that, fraud issues and all that, they include it in the management letter that they send to those charged with governance. And before, these matters were not reported to shareholders in the audit report. There wasn't any key audit matter. There wasn't any avenue for the auditors to get to know how management is managing the resources, the weaknesses in the system and all that. Is those charged with governance, that's the board of directors, who had access to such information. But in an attempt to bridge the audit expectation gap, the format for the audit modified audit report was revised, and that's where we brought in the key audit matters. So the key audit matters are those matters that in the auditor's professional judgment were of most significance in their audits. So among the management letter points or the issues outlined in the management letter, amongst them, those that were of significant in the professional judgment of the auditor, those that were of most significance, they will be included in the key audit matters, so that the owners or the shareholders will get to know what is happening in there. So for audit of complete set of general purpose financial statements of the listed entities, the auditor shall communicate these key audit matters in the audit report in accordance with ISA 701. When the auditor is otherwise required by law or regulation to decide to communicate key audit matters in the auditor's report, the auditor shall do so in the standard. So now in Ghana, it is allowed for the auditor to include the key audit matters. And now you know what key audit matters is. So here you realize that GCB Bank has indicated that it was the most significant matters that came to the attention of the auditor during the audit. They want to bring it to the attention of management, usually to the attention of shareholders. Usually they give details of this key audit matter. So let's go down. So you see key audit matters, IFRS 9 impairment. So they come across some issues as far as impairment is concerned, the treatment of impairment is concerned. They want to bring it to the attention of the shareholders or the members to help them in taking their decisions. So you realize that the impairment, they have a lot of issues on it. Okay, so they also have derivatives. They also have the issues on derivatives, and they have indicated it there. They also have issues on valuation of unlisted equities. It's a key audit matter that came to their attention. So these issues have been well elaborated in the audit reports. Now let us move on to the next one. Other information. The other information consists of information included in the annual reports other than the financial statements and the auditor's reports. So the auditor will indicate that their opinion on the financial statement does not cover the other information, and as a result, do not express any form of assurance conclusion on them. So let's find out if that's what the auditors indicated here. The directors are responsible for the other information. So here they are even telling you who is responsible for the other information. The other information comprise of the corporate information, directors report, statement of directors responsibility as required by the Companies Act, the corporate governance report as required by Securities and Exchange Commission Directive, and the banks and specialized deposits taking institutions, which we obtain prior to the date of this report. Other information does not include the consolidated and separate financial statements and our auditors report thereon. Our opinion on the consolidated and separate financial statement does not cover. So this is the statement I'm interested in. Our opinion does not cover the other information, and we do not express any form of opinion or any form of assurance thereon. So this is what the auditor is telling the readers of his report. that, hey, there are other information in here. And so this annual report. So let's just go to the content and find out the other information. So UCB Bank Limited annual report for 2019. Let's look at the contents. This is the content of the annual report. Corporate information, notice of annual general meeting, board of directors, executive committee, 5-year financial summary, financial highlights, chairman's statement, managing director's review, report of the directors, corporate governance. So all these other information that you see inside the annual report, the auditor is telling you that, hey, their opinion does not cover them, does not cover these other information. His opinion doesn't cover them. So take notes. His opinion only covers what? Let me change the ink. His opinion only covers the independent auditor's reports and the 5 components of the financial statements. So that's what the auditor is telling you under the other information paragraph. So take note of that. And of course, this is annual report. So let's just go through and see the kind of information in the notice of the annual general meeting by the secretary of the organization will be there. The secretaries of organizations are usually lawyers. And then look at the board of directors, I think. So board of directors, the information on board of directors are here. And then other information is a whole lot. The directors and their profile. Directors are a lot. Executive and non-executive directors, various committees, and then the makeup of those committees, the profile of the committee members, they are all here. Then 5-year financial summary, and get yourself a report, an annual report of a company, and then just go through. So you see that inside the annual reports are other informations apart from the auditor's report and then the financial statements. So the auditor is telling the readers that, hey, my report only covers the financial statements of auditors. Those are the information inside the annual reports. Some of them I was not even aware. I even became aware after auditing the financial statement. So my report does not cover those. That's all the auditor is trying to say under the other information paragraph. From the other information paragraph, we move on to the management responsibility. Sometimes you see director's responsibility. So here, responsibility of directors. Yeah, so here, director's responsibility. So here, they will stress the fact that the preparation of the financial statement is the responsibility of management. And also, they will also stress on internal control, the fact that internal control is supposed to be management responsibility. Internal control, as management determines, is necessary to enable the preparation of the financial statements. So here he's telling you that the internal control is the responsibility of management. And also, he'll tell you that it is the management who is responsible for assessing the entity's ability to continue as a going concern. So assessment of the going concern is what also the responsibility of management. So let's find out from here. The directors are responsible for the preparation of the financial statement. So you see, so they are responsible for the preparation. And then in preparing the consolidated financial statement, the directors are responsible for assessing the group's ability to continue as a going concern. You see, that one is also here. Let us look for the their responsibility for internal control. So you see it has indicated here. So they have also indicated that they are responsible for the internal control of what GCB Bank. So it is the responsibility of management and not what share and not the auditor. So the auditor will stress this. The essence of all of this is to what break the audit expectation gap. These are some implied responsibility of management: selecting and applying appropriate accounting policies, ensuring the information contained in the financial statement is relevant, reliable, comparable, and understandable. And then ensuring adequate disclosure to ensure material transactions are understood by users of the financial statement, and making accounting estimates that are reasonable in the circumstance. So these are implied what responsibilities of what management. Now we move on to the auditor's responsibility, and kindly compare the new auditor's report, the format. Kindly compare it to the old one. Get a new auditor's report and then the previous one, and then just compare. Look at the auditor's responsibility, a paragraph, and compare it to the previous one. You realize that this current auditor's responsibility paragraph is very detailed. There's about 2 pages. Just look at it. It's detailed. Auditor's responsibility. Look at it. So detailed. But before, it wasn't like that. Before, it was just a paragraph. But here, look at how detailed it is. The essence of this is to educate the readers of what the auditor's report in an attempt to bridge the audit expectation gap. So in the auditor's responsibility paragraph, the auditor will state the objective of an auditor as to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement and whether due to fraud or error, and issue an auditor's report that includes the auditor's opinion. So that's how he will state the objective of the auditor to be. Our objective, so let's go to the GCB's reports, audit reports. Under the auditor's responsibility, he's saying that our objective are to obtain reasonable assurance about whether the consolidated and separate financial statements as a whole are free from material misstatement, whether due to fraud or error, and issue an auditor's report. So here he has stated his responsibility. He also stated that reasonable assurance is a high level of assurance, but not a guarantee that an audit conducted in accordance with the standard will always detect a material misstatement when it exists. So here, the auditor is educating his readers on what reasonable assurance means. Let's come here and find out if he did it. So reasonable assurance is a high level of assurance, but not a guarantee, blah, blah, blah. So you see that it is the auditors of GCB, that Deloitte and Touch, is educating his readers on what reasonable assurance is. It will also go ahead to state that misstatement can arise from fraud and error. So you realize that he's sort of teaching auditing. You know these things from, what I've taught you so far. Misstatement can arise from what? Fraud or error. When we were treating ISA 240 error, he said that misstatement can be as a result of fraud or error. And he's even describing the fact that these misstatements is material if individual or in aggregate, they could reasonably be expected to influence the economic decisions of what he uses. So he will state all that misstatement can arise from fraud or error, and if individually or in aggregate, they could reasonably be expected. So the same wording. So in exams, when I ask you to prepare the audit report of a company, this is what I expect from you. And you realize that almost every audit report is the same wording. It's the same way, just the name of the company and the period and all that will change. Otherwise, the same wording. You can even confirm from the association, your various your KSB association, just confirm the audit report. You realize that it's the same thing. And it will state that as part of the audits in accordance with the standards. The auditor exercised professional judgment and he also maintained professional skepticism. We learned these things last semester. The auditor is now telling his readers that he applied these things. I wonder if the reader will understand this professional judgment. He said that we exercise professional judgment and then we maintain professional skepticism throughout the audit. I'm wondering if they will understand what it means, but we have learned it and we really appreciate the report that the auditor is giving, because that's what we learned in auditing. So he's virtually educating his readers on what the responsibility of the auditor is and how the auditor conducts his audits. He also described an audit by stating that the auditor's responsibilities are to identify and assess risks of material misstatement. So we also identify and then assess risks of material misstatements. And he also indicate that they obtain an understanding of the internal control relevant to the audit. So that's the next step. We obtain an understanding of the internal control relevant to the audit in order to design procedures that are appropriate in the circumstance. Okay. If you don't understand the internal control, environment, you wouldn't really get appropriate procedures to respond to your assessed risks and all that. They will also continue to say that their responsibility is to evaluate the appropriateness of accounting policies and the reasonableness of accounting estimates used by management. So we are also responsible for evaluating the appropriateness of accounting policies and reasonableness of accounting estimates by management. Their responsibility is also to conclude on the appropriateness of management's use of the going concern basis. Remember, we said that it is the responsibility of the management to assess the going concern, assess whether the company financial statement should be prepared on the going concern or assumption. So he will examine the appropriateness of management's use of the going concern basis of the accounting. So let's come here and check. We will conclude on the appropriateness of directors' use of what going concern assumption. Remember, after assessing the going concern of the organization, and if management thinks that the company will continue to exist in the next 1 year, they will prepare the financial statement on the going concern assumption or the going concern basis. So it's the responsibility of the auditor to also assess management's use of what the appropriateness of management's use of the going concern assumption. It's also their responsibility to determine to indicate whether they provided so when the financial statements are prepared in accordance with the fair presentation framework, they are supposed to evaluate the overall presentation structure and the content of the financial statement. So they have to indicate it if they did that. So the next step, we evaluated the overall presentation structure, content of the consolidated and the statement of financial positions, including disclosure, blah, blah, blah. So the overall presentation of the financial statement, they have to evaluate it. So they've stated it here as well. And you also have to indicate, if it's a group, they audited a group account, they have to indicate whether they obtain evidence regarding the financial information of the various components within the group, within the GCB group. They have to indicate if they obtain financial information on what the various components of the group, the various subsidiaries, associates, and all that. Have to indicate that. So here they have said that they obtain sufficient and appropriate audit evidence regarding financial information and components within the group to express an opinion on the consolidated financial statement of GCB group. Otherwise, they could have only expressed an opinion on GCB Bank. But if they are expressing an opinion on the GCB group as well as they've done in this report, then they should have received the they should have audited the various components of the group, the various subsidiaries, associates, and all that before they could express an opinion on the group account. So they will indicate all of this information in the auditor's responsibility paragraph. You also state that they communicated with those charged with governance regarding, among other matters, the plan, scope, and timing of the audit, significant findings and weaknesses in general control and all that. So that's the next thing. We communicate with the directors regarding and among other factors, the plan. So I've told you that it's just a format. All this report follows this format. So they have to indicate that they indeed communicated with those charged with governance. They have to indicate that information here. And for audits of financial statements of listed entities, they have to state that the auditor provides those charged with governance with a statement that the auditor has complied with relevant ethical requirements. They have complied with ethical requirements regarding independence and communicate with them all relationships and other matters that may reasonably be thought to bear on the auditor's independence. So you see, when you come here, we also provide the directors with a statement that we have complied with relevant ethical requirements regarding independence. You realize that almost everything I've mentioned here, GCB Bank, in the audit report, it is covered. It is covered. TCB is listed, that's why you are seeing this information as well. And now the next one is report on other legal and regulatory requirements. So if the auditor is required by law to report on any other matters, this must be done in an additional paragraph below the auditor's responsibilities. So do we have anything like that? Let's check. Okay, in accordance with the 7th schedule of the Companies Act 1992, we expressly state that we have obtained information and explanation. So they have to report in line with what the Companies Act. That's why you are seeing that information. They will state the Companies Act and various specific sections that they are working with. So that's the other report on other legal and regulatory requirements. So the other legal and regulatory requirements of the auditor, they've indicated all those information directly under the auditor's responsibility paragraph. So here is one in accordance with the Companies Act 1992, and then they've also the bank and specialized deposit taking institutions act and the specific requirements, specific sections, and they've stated all of that. Okay, so that's what the auditor will have to do. After that, after referring to the other legal and regulatory requirements, the auditor will now sign the account. So you come here, this is the signature of the auditor. And how is this signing done? The auditor's signature will be based on what is appropriate for a particular jurisdiction. It could be the firm name, personal name of the auditor, or both. So let's come here. So this is the signature. The engagement partner of the audit resulting in the independent auditor's report is Daniel Kwejo. So that's the partner's name. And this is also the firm name, Deloitte & Touch. I'm unable to highlight it. So there's the firm name, Deloitte & Touch, and then there's the partner's name. So it can be both, or it can be one of them. In this case, both are given. It may also require the auditor's professional accountancy designation or reference to the fact that the auditor or the firm has been recognized by the appropriate licensing authority. So that's the reference. This is the reference of the partner, Daniel Kwejo Owusu. That's his reference. That's his license number. And then when you come here, form on behalf of Deloitte & Touch. So this is also the reference or the license of what Deloitte. Their license number is also here. So in our jurisdiction, the partner's name should be there, his license number or his reference. And then the firm name should also be there, and then the reference should also be there. So that's the signature. These makes up the signature of the auditor. And after the signature, then the date that the audit report was signed will be there. So in this one, what's the date? 31st March 2020. The date will be there. Then after the dates, we have the auditor's address. So this is the auditor's address for Deloitte & Touch. Deloitte & Touch. The address is here. The Deloitte place plot number 71, blah, blah, blah. So that's the address. So this is the end of the basic elements of an audit report. That's unmodified audit report. So anything that deviates from this format will be the modified audit report, or the next lecture will look at modified audit report. Thank you so much for your time.